everyone, it's Lily and I am back again with some more crypto, blockchain, everything conversations because we want to talk about everything in this space. I'm here with Brian. You're the co-founder of Patricia Blockchain.
That's right.
Have I said it correctly?
You did.
Yes. I always
Well
sometimes I look at the names and I'm like, oh God, am I going to say this one right? And it's amazing to have you here today. As I say, I cover lots of different aspects of the industry, and blockchain is obviously the fundamental part.
Yeah. Partisia blockchain does get pronounced incorrectly quite frequently, so well done.
Yes,
Yeah.
I'm getting better. My pronunciations, it's always with a British
well done.
accent, so I have to warn people. I'm like, well, you're going to have to accept the accent. It's going to be said how I know to say it. But why, Brian? Why don't you explain a little bit about what Partisia is and how you personally set up this project?
Sure. This is quite a long story, so try to keep it concise.
I love a long story.
So, well, to start, Partisia blockchain is a layer 1 blockchain. It's built for speed, scalability, but privacy, which is the most important component of Partisia blockchain. And so privacy, if you just say the word, it may get associated with like, oh, secret transactions. That's not what we're doing. So it's a public blockchain, but we have private smart contracts.
Okay.
And so inside the smart contracts, you're able to do use cases that no other blockchain allows. So a good example that we just demonstrated at Paris Blockchain Week a couple weeks ago was zero knowledge voting.
Okay.
So our token name is MPC, multi-party computation, because it allows multiple parties to compute on private inputs. So with a vote, you could have a million people vote in, let's say, an election, and everyone's votes are kept confidential in the private smart contract, but the outcome is published publicly on chain.
This would be very interesting in general for governmental voting systems in the States and the UK, because everyone loves to say, oh,
Exactly.
it's biased. It's been you could say utilize our blockchain and we can actually make sure that there's no bias. It is 100% the results.
Exactly, and you can whitelist participants in advance, so you know that everybody's properly registered. You know how many people. Each vote's confidential, but you can see that outcome of the end result. And so I do typically lead with this use case when explaining like what a private smart contract that leverages multi-party computation can do, because it is, as you mentioned, a use case that everyone can associate with now because of all the drama that the world's had over the last few years with elections that are quite frankly questionable. Right? There's surveillance videotapes of ballot boxes or boxes full of votes coming in at 4 a.m. and being counted. So things are I wouldn't say that it's for sure that the election systems are compromised, but I think the problem is that people don't trust it either way.
Yeah.
So it creates a divide, right? So we need more transparent and futuristic systems, essentially. So we have outdated systems. It's time to overhaul them. So this is one example of what a private smart contract could do that creates a mainstream use case, because in layer 1 blockchains, we've seen a lot of ETH has done a good job with DeFi, and people try to replicate that, but you're just kind of copying the same thing. You need something more unique and that's different. And so this is something that's distributing blockchain technology to potentially millions of individuals in a different way.
Yeah.
It's not about trading or swapping coins. It's about using a system, being a participant in a new network that helps solve a problem.
Yeah.
And so another good example is we're working with some microinsurance policy companies. So one company issues 90 million microinsurance policies a year. These are if you pay that $9 to insure your flight, these types of insurances. They want to put all their insurance policies on chain. And that's just as a record of ownership for now, but then in a futuristic version, they would execute, if a flight was canceled, it would automatically, the data oracle notify the policy, and then it could pay the crypto out to the end user. So that's definitely a journey to get through the whole way, because you still have to then educate users to claim your money in crypto, which is a bit different. But with different stable coins, CBDCs coming, that's becoming more feasible.
Yeah, people are understanding. And I think hearing a use case like that is actually incredible, because it shows how close we are to be able to incorporate the blockchain as a technology for these businesses.
Yeah, and that's why I mentioned that privacy is the most important component of our blockchain, because this use case couldn't happen without privacy. The voting couldn't happen for big, sensitive topics. you could have public vote where you see what someone's public key voted for if it was for low stakes. But, a vote is supposed to be your private vote where there's confidence you can have your own choice and decision without needing to worry about the opinions of others. So that's why privacy is so important. We're unlocking this new potential.
Yeah, because it's a huge issue. The amount of times you hear in the news, wow, there's been a data leak. Everyone's information has been allowed out. You hear it from flights. I mean, insurance, if something like that happened and an insurance company let out any information, it's detrimental to people because that's all of their information.
Yeah, they can't have their policies on a public blockchain. They can have it on a public blockchain that's decentralized and robust and running 24/7, but in a private contract.
Yeah.
And you just kind of sparked a thought that I just lost, so it'll come back to me.
Yeah, we'll get it back. If people keep listening, they're going to get your amazing point that's coming.
Yeah, no, I think a lot of it has to do with so it's the more technical side of things. The reason MPC is powerful in this type of environment because, as you said, there's central points of failure where hacks can occur. So if someone's private policy's on chain, well, who is to say there's not a hack that could get in there and figure it out? But that's where the magic of distributed computing comes in. Because when you have blockchains that have so many node operators all over the world running a piece of the system, if one goes down, the system stays online.
Okay.
That's why it was important to incorporate blockchain with MPC. And again, this is the more technical side of things.
Yeah.
But there's been good MPC use cases like Fireblocks for private key management where you can secure your keys with maybe two other parties who secretly share what piece of the key. So imagine multiplying that by 1,000, where there's 1,000 different zero-knowledge node operators running this MPC scheme. You now have a very distributed sort of hacker-proof privacy system running on a public blockchain that's also super decentralized with node operators that the network won't go offline, and then the privacy layer can't get hacked. So that's the sort of merging of the MPC and blockchain that we think is unique, and it's a one of a kind. And the outcome is the use cases that we're sort of talking about here.
Yeah, so that's the fundamentals of how it solves the problem and then actually how it can be utilized in real life, both of which you see an issue and you try and solve it, and that's what you're doing. And how did this all come about then? How did you start with this whole concept?
Yeah, and just to build off that before I do backtrack, the final outcome in addition is distribution.
Okay.
So think about distribution of blockchain technology. You have the DeFi networks where people are in there trading. But how does more distribution occur? It's just people inside of an already fixed network trading, and maybe new people come and join, right? And so that's a slower process, and it's a small, very small network if you think about it. I mean, there's maybe 10 million people DeFi trading per day, realistically. That's in a 8 billion person world. But when you talk about 90 million life insurance policies, or excuse me, microinsurance, let's say, in 1 year from one company, maybe on average, let's just be conservative and say 3 policies per person. That's 30 million people. So that's 30 million people from one company that if they start distributing these policies are now touching the blockchain.
Yeah.
Right? So that's the key to true distribution for this adoption of the technology to the world is
it funnels out, it trickles out. And then as you're saying, it would also potentially involve the use of cryptocurrency. So it interlinks that where people can understand more about cryptocurrency. They'll be forced to actually start utilizing.
I mean, imagine your flight gets canceled. You have to call the company, let them know your flight was canceled, tell them you want to claim your policy. It takes 3 weeks.
Yeah.
If there's a data oracle that just relays to the policy on chain that the flight was canceled, the money sends right to the pre-registered wallet. You've just taken weeks and insane man hours out of the whole process.
Yeah.
And then, as you mentioned, the crypto now goes to the end user. They're in the economy by default.
Yeah. So then it actually does demand an adoption of cryptocurrency as well, because people are like, right now I've got cryptocurrency. What am I going to do with this? How do I understand it? So it sort of forces multiple parts of the industry, really. You've got the blockchain technology, you've got cryptocurrency, and a lot of people don't realize how well it does interlink, but there are obviously lots of ways that it does come together.
Exactly. So, I think when you think about this, it is becoming feasible that by 2030, we have 1 billion people, because it's going to be more B2C distribution of the networks.
Yeah.
So AWS, you're maybe using, some mobile application for picture sharing and editing. And it's all running on AWS, but no one even realizes it, right?
Yeah.
So this is where this is all heading, is like people are just going to be using these networks. It's going to be kind of just on top of the infrastructure with user interfaces that aren't so difficult to use, and then payment rails that are interconnected because of the blockchain. So
And it's a subtle transition. It's helping steering people in that
right,
direction.
you know, everyone wants to bull rush and force it in, and like they're kind of doing that with new projects and new tokens that pop up, but it's not creating more distribution. They're reselling to the same audiences. So that's the big difference.
Whereas, if you start integrating the masses, especially in simple things where they can utilize the blockchain, and you're showing people that there is a use case, it gets people interested, understanding, and almost in a way forced to take it on board, which is kind of a positive thing. In our space, it definitely is.
Yeah, 100%.
And so, getting back to how you got into this, obviously, I mean, it sounds like you basically solving one of the issues with the blockchain.
Yeah, so privacy was kind of the issue that we're solving for, to unlock those use cases to create true distribution and usage. So to backtrack, how did it all get started? It's quite a long journey for sure, and a combination of myself and the Partisia team. So, the first time I really got into I would say, revolutionary ideas of Bitcoin was shortly after Occupy Wall Street in the crash of 2008. Bitcoin sort of rose from the ashes of that crash. And I think probably America was the place where the word was spreading first, realistically, because there was like alternative news sites, and there was a politician named Ron Paul, for example, for all the Americans.
Any Americans watching,
you might know who
this
that
reference.
is, but yeah, most people probably never heard of him. But he's all about sound money, sound currency, and the Fed was a very popular campaign back then, it was sort of drawing attention to the fact the Federal Reserve just prints unlimited money. And so Bitcoin is sound mathematical money. So it really, and I was at university and the word started going around. And so this was like really the beginning.
Really early. So you're talking...
There was no exchanges. It was like $3 a coin maybe when I first witnessed it. It got picked up in different types of use cases, like illegal use cases everyone talked about. But there were also just like other ones that were different and unexpected, like online poker websites are really popular, and then one day payment processor went down, so people started trading player accounts for Bitcoins. So like it was just kind of used as a sort of tamper-proof, no middleman settlement system for payment. And so just sort of watched it. I was still in university, didn't have there was no exchanges anyways. You had to literally go to a local Bitcoin meetup and find someone to trade you something. So it's a very barter economy. But then in 2015, I think I'd mentioned before we started the podcast, I'd started my first company called undergroundseller.com. It's a wine e-commerce marketplace in the US. We sold bottles of wine at full value, but we gave upgrades at checkout. So it was a gamified e-commerce experience. So there was a problem in luxury goods, particularly wine, where discount retailers online were crushing brands. And in wine, if you discount your product once, no one's going to pay the full price. So there were big lawsuits, and there was a company called Lot 18. It went to 0 to $1 billion in 18 months or so, and then all the way to zero because they just got sued, and all the vendors pulled their supply because of the discounting. So we sort of moved in. It was pretty successful. We got into Y Combinator in 2015, the winter batch. For those who don't know, it's a very prominent startup accelerator in San Francisco Bay Area. And like Coinbase was funded by Y Combinator, Airbnb, Dropbox, I think Stripe, so some big names. And when we were there, Coinbase had managed to close their $100 million investment round from the New York Stock Exchange. And that was when I thought to myself, okay, this is the real deal. They're getting venture capital from the New York Stock Exchange.
There's something good going on.
It was a $100 million round, which in 2015 was like $1 billion round today. It was unheard of almost. So it was 200 or so for a Bitcoin back then. So then I sort of started buying it as a just investor, speculator that believed. I'd always sort of believed, and now it was like, okay.
I can see momentum. Momentum's happening,
and it's run by really good founders from who were participating in the Bay Area. So. Yeah, since then ETH came, bought a little bit of ETH. Didn't really understand it at first, but I was paying close attention to their website, the original homepage, which talked about a couple different use cases like ICOs and tokens, and then started working on decentralized data exchanges. So in the privacy realm, it was kind of like, how do you, as a user, control your data and then permission it instead of get it hoarded by centralized entities like Facebook? And so during the process, we were looking up MPC because my co-founder, Darwin, at the time, he's a computer scientist from Stanford. He had determined that MPC was a technology that could facilitate sort of secret exchange of data and permissioning. And so then we found the Partisia team in Denmark, who's historically been some of the originals behind MPC technology.
Okay, incredible.
And so we met them and decided, let's build out this use case and let's also build a huge layer one together. So this ended up being about 2017, almost the beginning of 2018.
Still quite early that you started
And
this.
so then we've been building it ever since, basically, slowly but surely. Then we ended up fundraising more and speeding things up. So we did, we did a early contribution round where it's a Swiss foundation that we formed for a public plus private smart contract blockchain.
Okay.
And so we did early contribution sale, 55 million, between 2020 and 22-ish.
And what stage are you at now? So the blockchain is, as you say, starting to have use cases.
Yeah, so it's running, it's live, it's a mainnet. We haven't released the token yet for trading or for transferability, but the tokens, the MPC tokens itself, are used to run the nodes, and then we bridge other currencies to pay gas.
Okay.
So like the whole network's running, and there's nothing prohibiting it from growing now. So we have, like I was mentioning, the proof of concept with microinsurance policy companies. We did a demonstration of the zero knowledge voting for the Paris Blockchain Week Awards.
Yeah.
So now it's growing, and the use cases are kicking off, and so we're kind of tripling down now on those and getting more business development people and sales teams out there to, let's, by the end of the year, do 10 more voting companies.
Yeah.
So let's get 10 more insurance companies.
And what would be your sort of ideal businesses to onboard onto the blockchain?
So right now, the insurance use case I'm really excited about.
Yeah.
Voting firms, because I think that's the most impactful use case that everyone can understand. And it's tangible for now, right? Like, insurance is a long road. You can get policies on the chain, but that's more just record of ownership. But actually getting the payouts automated and stuff, that's going to be like, let's call it 2030 that these systems are truly being used.
Yeah.
But voting, we can implement these things right now, and actually, users can get started, and it's not going to feel to them any different than doing some other online voting.
Okay, so that can happen very quickly.
So let's triple down on that. And then we have another really exciting use case, which is a partnership with the Red Cross.
Okay.
And we basically, in the private smart contracts, we have private payment networks where they're distributing QR codes to their beneficiaries. And then in these local markets, the grocery stores are accepting them.
Okay, amazing. So also doing something to give back as well, so making it a good ecosystem.
Yeah, well, and it's also, look, it's a good use case that's helping people, but the bottom line is also affected. So these NGOs are losing a lot when they go into crisis zones and distribute hard cash. It's hard to trace where the money goes and see the full impact.
Very true.
When you put it on a blockchain, you can follow it, you can trace the impact. But in our private smart contract, you can also protect the beneficiaries. So it's not just everyone watching and figuring out where the money's going. It protects whoever's, if a grocery store is collecting these QR codes, it's protecting that grocery store from the local thieves or warlords figuring out where all the money is and going and extorting it out of them.
Yeah, which again, you really are taking any issues that you see and trying to solve them utilizing the blockchain.
Yeah, increasing transparency, trust, lowering costs, facilitating faster systems and transactions. So,
and if you were to compare yourself to other blockchains out there, what makes you stand out? Obviously, we're talking about that trust element and still being able to be transparent, so what would make you stand out above other blockchains?
Yeah, it's the private smart contracts for sure. I think there's a lot of layer ones coming to market that claim to have the speed, which we have also, but it's not that you're the only one doing that, right? So we have the speed. We can do thousands of transactions per second. The cost is fair. I think that our strategy wasn't to have it be 0.00001 cents.
Yeah.
The Solana tried that, and you see what happens. There's abuse. People spam the chain because it's not too expensive.
Yeah.
And they cause problems. So, having it a couple cents a transaction or 1 cent. Yeah. That's still going to be, if someone pumps 1 million transactions, they're still paying $10,000 to the node operator.
Yeah.
So we clear them, everyone gets paid, and then the hacker goes away. So I think we have a good cost model. We do have the speed, but the private transactions and smart contracts for multiple parties. Zero knowledge proofs are getting popular. That's just me and you sharing a secret.
Yeah.
That's two people. So me and you could vote on something and like see the outcome, but who cares? Because we know what we voted for. The other person, but you can't do 1 million people in a big pool. So that's where we stand out, and we're right now the first to market there.
Wow, incredible. So you've got beaten the people. As you know, there's going to be other people trying to.
Everyone's coming, right?
Yeah.
So there's going to be other people who come, and it's hard. This is very, very rare technology, MPC, and our team from Partija had been working on it for long before we did a public implementation with a blockchain. So that's what gave us that edge to get to market first.
Well, that's the thing, like blockchain is a new technology, and there are obviously the faults in the current systems that are out there, and that's what you're trying to solve. You're trying to solve the trilemma by actually, creating your own blockchain and then saying to businesses, hey, utilize our blockchain.
Yeah, exactly. And I think, we even say that in some places in our marketing is sort of solving the blockchain trilemma with privacy. So it's like the extended trilemma.
Yeah, so you're really trying to help people that are looking for a blockchain to allow that to happen within their business. And what is to come for you guys? What have you got coming up? Obviously, you've already launched.
Yeah, well, I think we really need to prove it with these use cases. I think we need to get 10 of each. Because we've kind of got one, and this market is very used to. For example, the Aptos launch just came, and it's like, 200 dApps already building, but nothing's really happening there if you look at the blockchain, right? So we don't really take that approach of just hyping things up and saying, look, there's, we do have about 20 to 30 dApps building right now, but we're not out there hyping it and saying, look, and then we're not optimizing at this moment to have 5x that just to show off. We're kind of like building the real use case, and then we want to get the sales team to grow and then bring more because we can replicate those.
Yeah.
So it takes a lot of upfront work to get the use case implemented, a proof of concept, but then when it's working, we can resell that to 10 and then 100 different clients.
It's organic growth. You're going down the route of actually making sure you can show people.
It's just more like a traditional business approach, which is layer one public blockchains with foundations. It's an okay use of funds to give grant money and pay and recruit, but you're kind of then trying to play this venture capital role, which you're not going to do well because you're not venture capitalists. So you're going to see like short run success in that area and then long tail problems where the money starts running out, right? So like our business approach is more deploying the use case and then having sales teams scale and get 10 more of each and then get to 100. And that's going to take a couple of years.
Yeah.
But I think if we can do that, then the end result is huge.
Yeah. You're saying to businesses, if this is your issue, we're here to provide you that solution.
The challenge is how do you keep everyone happy in the crypto economy? Because people want fast results and they want it now.
Yeah.
And a traditional business approach is like a sales team and actually selling your technology to companies to help, as you said, solve a problem or just increase business efficiency.
Yeah.
And that's the stage we're in, is we're kicking that off. But we also need to have this balance of how do we get the existing ecosystem to feel comfortable with the growth and what's happening on the chain.
If a business is on chain with a certain blockchain, how easy is it to transition? Is that possible?
It depends. If they're on an Ethereum virtual machine, like an EVM, it is, because it's all the same code base. Essentially, you're just pointing towards different node operators.
Okay.
And people would probably challenge me on that and disagree, but
essentially,
let's put it this way. It's much easier to move in this sort of vertical where the code bases are similar and the structures are similar, minus some edits and changes, than our own completely custom thing. So like our layer one's completely custom. So it's not so easy in this case. But the way we address that is we have the bridge to other chains. So you can use our private smart contract and have finalization occur and then relay that info through the bridge to your existing dApp.
Amazing. Okay, so there is potential for that.
Yeah, that was one of our sort of go-to-market strategies is let's bring value to the existing ecosystems over here. Because we can't expect everyone to just move over.
Exactly. Your target can't just be new businesses that are setting up. It has to be people that already have it established. You can still help to provide that technology.
Yeah. And when we're approaching businesses, though, that aren't on the blockchain yet, because we are in this blue ocean where no one's there yet, we're actually not really competing against for bids right now because we have this sort of unique privacy tech that no one else is offering yet, or at least ready to go deploy.
Yeah.
So like in that area, it's not so hard convincing them, let's build everything on top of our chain custom.
Yeah.
But if you're trying to say to a DEX operator on Ethereum, hey, move your whole thing over to us and let's try to have a front-running resistant DEX because we can do that, they're not really ready to make the huge leap. So that's why we put the bridge together to maybe have some privacy preserving capabilities occur over here. And you could even think DAO voting.
Yeah.
You could have everyone vote over here, but still relay to the DAO and execute whatever the changes on the chain there. Yeah.
That's very, very important because I do think people they're concerned. They've already got something established. The whole transfer thing, people do get a bit worried. So it's great that you actually can do that within your business. I think there's so much potential of what you're doing. I think the fact that you're trying to do it rapidly is also going to be beneficial because you'll be beating all the competitors that are yet to come.
Yeah, we just have no choice. You have to move super fast. And we already, you can always sort of feel the pressure when you're sort of in the operator role. You see things coming, other things pop up and a lot of the similar language starts to get used. So yeah, you have to go fast.
It's an exciting space. It's always changing. People are always trying to come up with, as I say, new business concepts. Now we're creating new blockchains that are actually probably the 2.0. They're the much better systems that we had before. So when people question the blockchain, you are again a new solution to the issues that we thought we were finding solutions for before. Yeah. Just building on the solutions.
Yeah, I think 2030 is actually feasible, where you're going to see the enterprise use cases actually on the chain. And I hate to even hear the word or acronym CBDC.
Yeah.
But whether we like it or not, those are getting released, and that's how settlement can occur, without it being too out of the normal, right? Because if you tried settling now with Lightning Network Bitcoin payments, they're not ready for that.
No, people still are concerned. People still are very stuck in their ways. So as you say, if there's something more backed by the government, it will help.
I mean, all the Americans use Venmo, PayPal. Everyone has an account now.
Yeah.
So if they release the CBDC, all that needs to happen is those companies need to add the rail.
Yeah.
And they can send it right to your Venmo account, which is linked to your Facebook, right? So there's not many more bridges that need to be built. It's pretty simple to actually integrate.
Yeah.
Right into whatever the end all be all.
The bridges are almost basically there. It's just a matter of people taking them steps.
And then when they are there, these companies are going to also offer services to buy other cryptos like Bitcoin and ETH.
And then
those aren't going to go away.
Yeah. Expands it out. I think there's so many exciting things going on in the space, and I think it's great for you to actually explain how important the blockchain is in real world, because as I say, I think so many people get caught up in cryptocurrency, and that's their whole concept of what a blockchain is. They have no concept of the fundamentals behind it. So I think it's amazing that you're showing there is so many applications of the blockchain, and it's inevitable that it's going to be taken on board, and you're just taking them steps to put the blockchain in a better position.
Yeah, I would say I think you described pretty well what we're trying to do.
Yeah, but it's so important, and that educating people, that's what we're all here for. That's what we go to events for, and we're trying to explain to people blockchain technology is the future. Yeah. And everyone in this space is really being the fundamentals of how it's going to be integrated, how it's going to be accepted. So really just watch this space. The blockchain is coming. Brian is coming with his incredible blockchain, and the future is definitely bright in the industry. So, I mean, you're saying 20...
Yeah, look, ton of work to do. And you have to have a little bit of luck on your side and good timing and market placement.
Yeah.
So I think we're pretty good timing, I would say.
I mean,
this is the next wave of tech. If it's not us, it's going to be someone else or a couple
others.
So
you need to be like the rabbit in the hare. You've got to be pushing.
Yeah, we're pushing. That's for sure.
Yeah, no, it definitely sounds like it. And as I say, there's no quick way to make money in any industry anymore. It really is just about you're actually just solving an issue that there is to make it a better infrastructure. Yeah. For everyone to adopt. So
and if you can do that, then it's worth something.
Yeah, definitely. You're adding validity to what we're already doing. So Brian, thank you so much for joining me today. It's been fascinating. You guys have learned lots about the blockchain. I hope you've got so many keynotes to take home. And watch this space, check out Partitia, and join part of this incredible community. Thanks guys. Thanks Brian.
Thank you.